Okay, so we are going to take a look at September 1st glance. Now, we are only 3 weeks, just about 3 weeks into the fall market. And most of the time when we look at data specific to Toronto real estate, we're looking at lagging data, meaning that we won't really have the final picture on September until October. And in one of our previous podcasts, we were talking about how we were going to take a look at boots on the ground, backed by data, what we're seeing in the market very, very early on before any of the actual stats for the month will come out in October. So we always follow up on what we say we're going to do. September 1st glance. Here we go. Welcome to the Toronto Real Estate Podcast. My name is Ralph Fox, and I'm the co-founder and broker of record of Fox Marin Associates. And today we have the lovely Corey Marin, broker and co-founder of Fox Marin, here to join us to talk about September's market in Toronto. Early days, but it's still interesting to see what's happening despite all the fear and uncertainty and doubt that's out there, the good, the bad, and the ugly. And if you love this podcast or even just really, really like it, please be sure to hit that like button. And if you have any comments, we'd absolutely love to hear from you as long as it's constructive down below. So thanks so much for tuning in. And Corey, so much thank you for being here today.
Well, I'm looking forward to having this discussion. And as you mentioned, we wanted to visit these numbers as we had promised to do so in a former podcast. So here it is. Collectively, we are here to discuss some data points. And so I hope this is helpful for our viewers out there just to get an inside sneak peek as to how things are shaken out in September in Toronto specifically. So a couple of things I just want to mention off the top. When we are pulling data for you, on the MLS system, which is the way that we search and report data in Toronto, we're very limited to as what we can pull in terms of charts or things that are pre-prepared for us. So the data that we're sharing with you today has all been manually extracted. So we basically looked at certain dates, we compared them with last year at this time, and then we manually put them into tables for you. So we could look at how this first 3 weeks of September is comparing to the last 3 weeks of September 2023. The other thing I want to mention is that MLS, our system, caps the amount of listings you can look at one time. So the cap is 200 properties at a time historically for us to be able to take an inside look in terms of history and averages. So because our data is pooled that way, we decided it was best to slice and dice the data as per neighborhood in category. So I want our viewers to just know right up front that we're not looking at every single neighborhood here. We're pulling ones that we think are interesting for you at the areas that we work often. We have some inside stories to share, and we'll just give you a little bit of a smattering as to what's happening in these various communities. And we're looking at freeholds, so low rise. And we're also looking at condominiums, of course, as well, which is where the media really likes to harp on the Toronto real estate market. All right, so let's jump in. The first area that we're looking at is categorized in MLS as CO1. And we've created a little map for you just so you can wrap your head around as to where we are speaking to. But we're centrally looking at the west side of Toronto downtown. So think of it as being basically Little Portugal across to the Bay Street corridor up to Bloor Street and down to the water. So downtown west, it's known as CO1. And what we've done is we're comparing certain data points from 2024, the first 3 weeks of September, to the first 3 weeks of September 2023. And we're looking at average list price, sold price, percentage to list, days on market, number of sales, and number of new listings coming online. So you can see this table here for you. We're trying to make this as simple as possible, also acknowledging that we haven't extracted every single thing we could possibly be looking at. We're looking at highlights here. Just a nice snapshot. And you can see that the average list price overall in this area for freehold specifically is down about 3.2%. And the average sold price is also down close to 4% versus last year at this time. So nothing crazy here. It's not like we're seeing a massive correction or price drops of 15, 20, 25% versus last full at this time period. And the average percentage to list is down about 1.9%. So sellers are getting 1.9% less than they did last year as per their list price. We're also seeing things taking longer to sell. So 80% longer to sell. So if you could see here last year, it took on average 15 days for a property to sell. Now we're seeing in 2024, 27 days to sell. So that's a little bit of increase on time on market and for buyers to make that next chess move when it comes to their freehold property. We're seeing the number of sales actually increase versus last year at this time, which I find interesting. So we've seen a little bit of a jump in activity. And then in terms of the number of new contracted listings, which means the amount of new inventory coming online for our buyers out there that want something new, juicy, and exciting to see, we've actually seen a decrease in new listings at about 2.3%. So I'm acknowledging that this data pool or this data set is quite small and very tight. So this is not a huge macro picture here. This is very minutia numbers. We're just trying to get a sense of what's going on. And so when I look at this category on the lower west side of the city, I'm not seeing anything to rock my boat either way. Like I'm not like, ooh, mega strong or mega weak. I'm like, things seem to be ticking along at a moderate pace. Ralph, what would you like to add to this?
I think what's interesting is a lot of people, including myself, were expecting a flood of inventory to hit the fall market, thinking that a lot of listings had been held off over the summer with the understanding that rates will be coming down. So we haven't seen a flood, again, very small sample, but we've seen less listings, slightly less than last September. So I do find that interesting. And while we have seen a significant increase in sales, which is also interesting, time on the market is lagging and it's up by quite a lot, 80%, 15 to 27 days. So that's a trend that we really want to watch over the next month or two to see if it starts to increase or decrease or just sits at around this level. And I think that will really help tell the story as to where we're going in terms of pricing for this fall, along with the number of sales and new listings. So these are all great indicators to watch to help us predict where things are going over the next few months.
And then I'd also like our viewers just to know in terms of the current inventory that's sitting on the market right now, we only have 138 freehold houses for sale in this entire community right now, which is not a lot. And let's
That's
just
surprising.
Yeah, that's not a
I
lot
would
at
have thought
all.
it would
This
have
is
been a lot
a
higher.
huge geography in the city and a very popular area for that matter. People want to be living in Little Italy and Trinity Bellwoods and in the university area. People want to be living in these communities. So I find that to be very limited supply. And then also knowing that a lot of that supply is probably crapola supply as well. So when you slice out, let's say 50% of it being quality inventory versus kind of shacky inventory, we'll call it for lack of a better adjective, then there is a limited amount out there for the buyer pool to be really taking in and ingesting right now as well, considering this is the fall market, whatever that means these days, right? All right, so we're going to move on to a different community now, a very popular area for first-time homebuyers, very trendy area, and this is EO1. So for our viewers, I want you to think of EO1 as being Leslieville, Riverdale, North Riverdale, and a little bit of east to that being your Greenwood, Coxwell area. So it's highlighted for you here on the map, just so you can get a sense of this, but we're thinking east of the Don Valley. So this area has notoriously been known over the last decade as being a very popular area for those graduating from their first condo into their first low-rise property. This is for young couples, young families, people with their first kid along the way, anyone who's trying to make that leap into the freehold market. So we have worked in this community for years and years, and we've certainly seen prices rising year after year. And it's a trend we're going to continue to see, it looks like right now. So as you can see on this table, that the average list price has come down by 4.8%. And I want to revisit that in a moment. But also noting here that the average sold price so far at the beginning of September is actually up by 1.19%. I know that's nothing insane, but we're not seeing drastic price correction in this neighborhood as much as I'm sure a lot of buyers would like to see, specifically because this area is so trendy to live and to purchase. The average percentage to list has actually gone up. So sellers are getting more than their list price by about 6%. The average days on market, things are selling faster than they did last year at this time. The number of sales has decreased by about 22% versus last year. And the number of new contracted listings, so new inventory coming on the market, has actually dropped versus last year. So less opportunities out there for buyers in this community. So very interesting to look at this neighborhood. This is a neighborhood that we sell in a lot and are very familiar with. And I think it's interesting to see the average list price coming down by close to 5%. And we'll see this in a couple of different areas. And I think it's because listing agents and their clients are really shifting their strategy when it comes to list price, especially in this neighborhood, which is notorious for a list much lower than market value price, have an offer date, and anticipate multiple offers on that property to drive up the price, often seeing 10, 15, 17 offers on one semi-detached property on a popular street, and then the property selling way beyond the list price. So it seems like there's a little bit of a correction when it comes to strategy, as buyers are like not in the mood for that type of market and want to see properties listed a little bit closer, at least, to what they are worth. I think people are sick of that right now and just don't have the headspace for that type of bid strategy. Ralph, would you agree with that?
Yeah, I would.
Okay.
I always agree with you.
Do you?
Yeah, most of the time. It's a good thing we have this on video too. So
yes, that's so true. We always have proof.
Absolutely.
And would you like to speak to the property that we actually currently have listed here in this category?
Yeah, I mean, I won't go into specifics because we've actually taken offers on it today, but it's a property, a prime location right in this pocket. We had a lot of activity on the property, but what was interesting is when it first came out, it was rather sluggish for the first 3 or 4 days. It came out, I can't remember if it was a Monday or Tuesday, I think a Monday, and it was very, very slow, but it really started to pick up steam on Friday and Saturday and Sunday. We had very, very busy open houses, and it felt like a lot of the energy surrounding the listing just was increasing going into the weekend. So I'm not sure if that's a trend or just something that we experienced over the last few days on this specific property in this specific area. But we did have a few offers registered and offers submitted, which we're working our way through tonight with our vendor. But it just was interesting seeing that activity pick up and seeing the amount of response and conversations that we were having with buyers and buyer agents. So there definitely still is life out there. And I think, especially in freeholds, we're seeing that with the data that we're looking at right here, especially when you see average days on the market down by 12 with a slight decrease in sales.
Yeah, definitely.
But sorry, a slight decrease in the number of new listings coming out, which again is really what I'm watching. Is we're not seeing that flood of anticipated, at least low-rise inventory coming to market.
And then just as a separate data point for this area, in total, there's only 78 freehold properties listed as of today when this podcast was recorded.
Again, very tight.
Very tight. And again, let's just say 50% of it's crappy, not to use that word.
In talking with the buyer agents on our team, we're really struggling to find quality inventory. And that's really the problem right now is, even though we're talking about not a lot of properties on the market, not a lot of them would be considered highly desirable properties. And those are the ones generally that are sitting. I think buyers are becoming a lot more picky. And it's kind of the adage that in this environment, buyers actually have the opportunity to buy a house that they like and want to buy, not just whatever that they can get that would work within their budget.
And then also, I know somebody's going to say this in the comments, is yes, there's properties out there to buy, but then also who can afford these properties as well, which is a whole other conversation. But I'm just acknowledging that somebody for sure is going to write something about affordability in the comment section. So completely seeing you, hearing you, acknowledging you, and we'll talk about that in additional podcasts to follow. All right, let's just change it up a little bit and look at a different area. So this is CO2. So CO2 is a little bit more of a wealthier area. It's not necessarily your first-time home buyer that will be living here as much. You're seeing a little bit more of an established family community here. So you're looking at Annex proper, your Casa Loma, Yonge and St. Clair, and your Witchwood communities that encapsulate this particular section of the marketplace. And when I look at this, first of all, just to note, there's only 91 houses on the market in this area, which again is quite tight. We're definitely looking at a higher price point here. Just to the property ladder. This is where people are going to move into later in their real estate journey. But prices are up. So the average list price is up over 5%. The average sold price is up almost 8%. And the average percentage to list is almost up 3%. So the average days on market is up from 16 days in the market last year up to 32 days in the market this year. So things are taking longer to sell. The number of sales, there's been less sales than last year at this time. And the number of contracted listings or new inventory coming on market is about the same as last year. So this is a smaller, more compressed data set again. We're only looking at a handful of sales here. We're only looking at 9 transactions to give you these averages. So please, 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 viewers, just think of this as being hyper micro analysis in this particular community. And we're just trying to get an inside perspective as to what's happening here. And this could go in different directions. And I would also like to acknowledge when it comes to averages, you have to remember if there's a couple of huge sales, let's just say, there was like a $7 million property or a $10 million property sale in this area, it's going to drag the averages significantly up, just as it would in the reverse if, a small bungalow happened to sell in this area. I can't imagine this, but for like $800,000, for example, it would drag the average, especially when we're looking at a smaller sample size here. So very interesting stuff when it comes to a little bit more of an established neighborhood. All right, moving on to W01, also like a very, very trendy neighborhoods. You're looking at your Ronsonsvales, your South Parkdale, and then all the way into your High Parks here. This is definitely a more family-oriented community, not as close to the downtown. People want access to green space here. They want access to the highways. If they perhaps might be working out in Mississauga or in your Oakvilles, but they also want to have all of the amenities of the city. So this is like a nice hybrid community. It's very walkable. People love, love, love W01. It's just come up so much over the last 10, 15 years. I mean, I lived in South Parkdale at some point, probably in the 2000s. And by no means was it like how it is today. There was nobody wanted to live in South Parkdale, and you lived there if you wanted to pay really cheap rent. So that is when I experienced living out in this particular area of the city. So currently, only 60 freehold properties for sale in W01. And this is a pretty big geography as well. It spreads quite far. And the average list price is about the same as last year, just down about 1.6%. The average sold price, a little drop here, closer to 5%. Average percentage to list, balancing out versus last year. Average days on market, so you're seeing a little bit longer for things to sell. Seems to be a trend when we're looking at each of these communities. Number of sales, about the same as last year. And the number of new listings coming on market, there's about 10 new homes versus last year at this time. So a 25% uptake on new listings coming online. Again, not to repeat myself, but nothing to like scare me here or like give me the niggle or make my solar plexus feel concerned that all of a sudden we're seeing market trends dropping significantly. Oh my gosh, there is going to be a crash after all. Everybody take cover. I'm like, okay, this seems to be like decent. We're ticking along just fine. Ralph, do you want to add anything to W01?
No, it just seems like, as you're saying, there's like a trend line right now that we're seeing across the central and downtown Toronto in terms of how the market is performing in the early days of September and into fall.
Yeah.
And we'll do a bit of a roundup once we finalize this with the last slide here.
Perfect. So I just want to look at one more freehold community, and then I want to touch on condos because that's definitely an area that we want to address. So I selected this area, which is C09 in combination with C10. And the reason I combined them is we just didn't have enough sales in both areas to do them separately. So I combined them. This is a really big chunk of geography. I chose this area because this is considered to be more of a luxury neighborhood in the city, definitely higher price points, high demand, but of course, affordability is going to affect this. And same with inventory available as well. A lot of people want to live in these areas despite the price points. So I've got your map there just so that you can wrap your head around exactly where we are examining. And again, as a reminder, this is just freeholds here, and there isn't a huge amount of condos for us to be analyzing in this community regardless. Here, we're looking at price points over 3 million on average. Okay, just to wrap your head around that, with a price decrease or percentage change down about 16%. And the average, sorry, that's for list price. And then the sold price down about 18%. And the average percentage to list just over 5% decrease versus last year at this time. Again, things are taking longer to sell. We're seeing a few less sales than last year at this time. And then the number of new contracted listings, people listing their properties to sell, is actually down versus last year. Just a little bit less supply coming online. So from this small sample set in different communities and different price points, this one seems to be the most affected on price so far. It will be interesting to see how things unfold throughout the rest of September, October, and November, and then see how interest rates may or may not affect a community like your Rosedale or your Mount Pleasance.
What's interesting is at the beginning of this year, the wealth tax was brought in. It started at purchase prices over $3 million. So it's interesting to see that $3.5 million now move down to just under 3 at 2.86. So it'll be interesting to know how much of an effect the wealth tax has had on this price point, driving prices below that mark. I find that interesting. And this is the most significant decline that we've seen in the luxury market. So again, still very early days, not a huge sample size, but this is something worth watching and seeing how that affects the lower price point, and it may actually help increase prices on the lower price point.
Yep.
So definitely
Really?
something to watch. And I think before we get into condos, I think there's some things that we're definitely seeing now across the city, just in terms of a summation here. We're not seeing the flood of inventory that everybody was expecting. And I definitely was expecting an uptick. It just hasn't happened. And we aren't seeing really much of a change in the actual amount of new sales that were happening. In some cases, we're actually seeing a slight uptick. Days on the market across the board, that's where we're seeing the biggest change, is things are taking longer to sell. And so if that continues, that could have a bit of a negative drag on prices. But for now, prices are pretty resilient in low rise across central and downtown Toronto.
Yeah, love that summation. Thank you. All right, let's look at condos quickly. We selected two areas that are very obvious for us to pull data from. So the first one is going to be back to CO1, so your lower West End. Viewers, I want you to think of your waterfront communities, so your like City Place, your Fort Yorks, condo-centric areas around the Rogers Centre, King West, all along Queen West and up towards Bloor Street. So all the high rise that you see on the West End, that is what we're looking at. So right now, so this is the context I want you to think of. In terms of inventory, we have over 1,600 condos listed as of today when this podcast was filmed. And we are seeing a slight price adjustment here. So the average condo list price is down about 9.4%. So people are a bit more savvy with their list price. And the average sold price is down 8.7%. So the average percentage to list has been about the same compared to last year at this time. And then the average days on market has slightly gone up at about 13%. So as we mentioned with freeholds, condos, if they're selling, are taking longer to sell. The number of sales has actually decreased by 10%, but that's not crazy considering everything we keep hearing about condos. So a little bit less sales activity, but still, if you think last year at this time, there was 146 condo sales. And this year at this time, we have had 130. I'm not like, oh my God, like that's insane. And then this is what I find interesting, to go back to your point, Ralph, is that in terms of the number of new contracted listings, new inventory coming up online, we've actually only seen an increase of new condos coming to market by 0.64%. It's not like there was like 1,000, 2,000 condo owners that tried to list their property effective after Labor Day. So, yes, viewers completely acknowledging the inventory that's out there. We've got a lot to chomp through when it comes to condo inventory. Completely see it. I know it. I hear you. I get it. But then when you see this and then you see these numbers, you're not like having a heart attack about it either. You're like, okay, this seems like it's manageable. We just need time for buyers to feel a bit more confident, for their sentiment to change, them to wrap their heads around the interest rates. When will that really take shape for them? And when are they really ready to move into the condo segment? And that could be this year, but it might be next year. So that's a hard one to predict.
We are still seeing sales. And I think the thing to know about the properties that are selling, it is the ones that are vacant. It is the ones that have really good floor plans. It is the ones that are properly marketed. And those are the ones that first-time buyers, not investors, because they're out right now, but people looking to actually get into the market before rates continue to fall. Those are the ones who are buying those premium units, and those are what is selling. The tenanted properties and the properties that, a 3-bedroom condo that's 600 square feet, those are the ones that are sitting and probably will continue to sit for a long time. But the ones that have that intrinsic value, those are the ones that are selling, and we are seeing an increase in buyer sentiment for first-time buyers looking at this asset class in a way that we haven't seen before over the last few months, certainly. So I think it's a really interesting thing to see that this flood seems to be, at least for the first 3 weeks of September, a bit of a tourniquet on that. And that is really going to be something to watch as we move into the fall. Are new listings going to continue to come onto the market at an accelerated pace, or are we just going to stay on last year's trajectory?
Yeah, like has the flood already taken place? And I feel like with condos based on this, I feel like the flood has already happened. And now we're just going to have to just eat through all of this inventory before we see prices starting to tick up the other direction. And I think that might take some time. But I think anyone who was thinking that they wanted to dump because of their interest rates or because they needed access to capital or they didn't feel confident at the Toronto market or they no longer wanted to be a landlord, whatever their reason, I think that initial dump has happened. And we're just going to have to sit through this for a little while before there's course correction here, which is not a bad thing. It's not a bad thing.
Yeah, I think if the market can just stay relatively steady as she goes, we'll see. But I think that would be the best thing, the best outcome that we could hope for over the fall. I know a lot of people who are watching this just are dying for the whole market to crash. It hasn't happened. I think we're on the other side of the worst of the storm. And in my opinion, what you really want to keep your eye on is the low-rise market. And once you start to see that first-time buyer million to, let's say, 1.3 million property really start to take off. And if you look at some of the policy changes that are going to be taking effect for first-time buyers in December, as per the Liberal government, with the extended cap from 1 million to 1.5 million and the 30-year AM that goes along with that, I think that's going to go a long way to really ignite that lower price point freehold home. And as we've just seen, there is not a ton of inventory, so it will not take much to push that up. We're looking at maybe another 75 basis points of interest rate decreases between now and the end of the year, potentially. So all of those factors, if and once, because it will happen, when is hard to say, but once low rise really starts to take off and become out of reach, that's traditionally when we start to see it impact prices on the condo market. Will that happen this year? Probably not. Will that happen moving into next spring? There's a possibility of starting to see that type of movement or transition in the market starting to occur.
Let's just look quickly at CO8, just because we haven't really touched on this area yet. This is also a popular condo segment. So we are now looking on the east side of Yonge. So think lower east side Toronto. Think of your distillery districts, your Church Corridor, Canary District, St. Lawrence Market, Regent Park. Okay, so you're seeing that segment there. Right now, there's just under 1,000 condo listings in this particular area of the city, CO8. And similar sort of correction per se, if you want to call it that. The average list price is down by just 9%. And then the average sold price also down by about 9%. First 3 weeks of September, average percentage to list about the same as last year. Average days on market. This is again, trend. Are you hearing it in our voices? Up about 80%. So it's taking 80% longer for our condos to sell in this area.
That's very significant.
And I have a theory about that, which I want to revisit once we get through the numbers. Sales are down about 38%. So last year there was 100 sales in this area in the first 3 weeks. And this year there's only been 62, which I think is really interesting. So there is, a 40 or so sales difference between those two values. And then the number of contracted new listings coming out is about the same. Actually, there's just about 2.3% more than last year, which is nothing freaky or scary about that. But what I'm wondering, and Ralph, I know we talked about this briefly earlier when we were reviewing the data as we prep for our conversation today. This is just my theory. CO8 is a very diverse area of the city. So you have your quality communities like your St. Lawrence Market, your Distillery District, your Canary District, and then lots of the little amazing condo buildings on the Church Corridor as well. But then you're also combining this with areas like St. Jamestown and Regent Park and some sections of Cabbagetown. And just my experience of the city, some of these neighborhoods have been really affected by how the city has changed since COVID. And when you drive down to Sherbourne, there's tents pitched through that park everywhere. And there's rampant drug use and a lot of homeless shelters there. And that's not to say that I'm criticizing anyone that is having to deal with
Careful, Corey. Careful.
I just want to be sure that I'm just acknowledging that is just part of these particular pockets of the city. And as the city has changed so much, I'm just wondering, the theory, are people less drawn to these communities because they have become a little bit sketchier and it's not something that's hidden behind the back alleyway of a condo building like it used to be. Now it's just out there in the open during the day and night. And I'm just wondering if people are this isn't for me. I want to be living in a more safe area where I can walk to get my coffee or drop by and meet a friend and not be scared that some guy is going to come up to me that's high on fentanyl. I'm just putting it out there. What do you think of my theory, Ralph?
I think it's unfortunately probably accurate. I think once we have more data set, it would be interesting to see if we could narrow down a little bit more to get a sense of these submarkets within CO8 to really understand how the homelessness and how crime is affecting sales in those areas, because I think it must be taking a toll. It's really unfortunate because this wasn't the Toronto I grew up in or the Toronto that I know. And it's really sad to see because there are a lot of people out there who are hurting. And if you are a buyer and you have a choice of living in neighborhoods, safety is becoming a real concern. And I think a lot of people will be second guessing where they want to end up, with safety being almost at the top of the list, even above walkability, which is something that used to be a key driver in people's search. So I think, again, that's a trend to keep our eye on, and hopefully over time, some of these internal problems the city is having will course correct. But definitely for the time being, I could see that being an issue. But, taking a step back overall, looking at these two sort of key condo areas, we have seen a decline in prices. It's without doubt that, in August, I believe we're looking at about 4% decline across all of these areas. And now we're looking at about 9 to 10. So definitely still early days. The data sets are really small, but I think the key indicator to watch in terms of where prices are going to go in this segment, especially over the short term, is going to be days on the market. And if that continues to expand, even if inventory is not pouring in the way many would thought, even if it stabilizes, that could prove some challenges, especially over the fall in the condo market.
Yeah. Definitely. So it'll all turn around. It's just a question of when it will turn around. And we're just hoping that by sharing this information with our viewers out there, this just gives you an education and inside perspective as to what we're looking at and just a way that we review information with our buyers and sellers out there to help them make informed decisions that work for them and their goals. And by no means, because we just know this is going to happen, are we trying to shove the real estate market down your throat and tell you that you must buy? And we're not telling you anything that is working in our personal best interest. We're just sharing what we feel or see from a boots on the ground perspective when it comes to the first 3 weeks of September and the data that we have access to.
And the other thing that I just want to leave with here
Yeah.
is the US elections is probably having a bigger impact on the market than people really realize. I was really shocked in 2020 in the fall to see how many properties were sitting, how slow activity was. And remember, that was coming off a torrid summer off the back of COVID when it looked like the market was going to be unstoppable. And inexplicably, that fall was an extremely slow market, especially in the condo market. And it kind of felt like it was almost the end of the world. And I remember we had about 6 or 7 condos on the market in that October. We couldn't even get showings. And literally the day after the US election, all 7 sold within a 2-week span. So I'd really also just keep your eye on that, because it's not like we are living in the United States and directly affected by the outcome. But I think a lot of people are distracted. And I think overall, even with the soap opera that we have going on in Parliament Hill right now, let alone 2 potential world wars happening almost in real time, I think people are very, very distracted. These are large moves that people are considering making. And I think until people have what they need, which is certainty in a very uncertain time, I think we're going to see continued slowdown in activity relative to what we could be seeing if we were in a more stable economic period, given that the idea of higher for longer has now completely gone out the window. And it's really now almost a race to the bottom, at least for the short term in interest rates.
I can't wait for it to all be over, to be honest.
I'll just wake up. Maybe you'll wake me up, Corey, one morning and be like, Ralph, this was all just a nightmare the last 4 years.
Yes. I'm looking forward to the other side. But as you and I sort of have been saying, that we feel like we're through like 75% of the insanity and we've got like a 25% to go. So everyone just hang in there just a little bit longer. And I think that we're going to see some greener grass at some point soon.
And if you own desirable real estate in downtown Toronto, contrary to what a stereotypical realtor would tell you, we're going to tell you, hold. Only sell unless you're forced to sell or you have a better use of the capital elsewhere. But under no circumstances should you be selling right now, because the market will return. And when it does, I think you'll be very happy that you held on.
Yes, agreed. Well, Ralph, thank you so much for this discussion. I know that we will chat again in the next 5 minutes. But I always love having these discussions with you, and you always just have such great insight for everybody. And of course, if you have feedback or a different point of view, we love to hear from you. We try to respond to all the comments. Please leave your thoughts below, subscribe, like, and turn on your notifications. And we will catch you on our next episode next week. Thank you so much for being here, and we'll talk to everybody soon.
Thank you so much. Hope everyone has a great day, evening, or morning.